Standard Chartered PLC by Josh Berger, Emily Bennett, and Aaron Little.
So first off, just a little rundown of what's going to happen later in the project. First, we're going to start off with the background information and the history of the Standard Chartered Bank, and then exactly what they did in terms of money laundering and how it was exposed to the public. And then after that, go over the laws set in place to prevent this money laundering, as well as the consequences for breaking these laws. And then finally, the consequences for the company as well as its suppliers.
Standard Chartered Bank was formed by the merging of two banks in 1969. The Chartered Bank, which was founded by James Wilson due to there being a royal charter from Queen Victoria in 1853. After it was formed, there were opened branches in Mumbai and Hong Kong, as well as India, Australia, and China. The Standard Bank was founded by John Patterson in 1862, and it mainly flourished in British South Africa, and it started business in the Port Elizabeth. Trade between Europe, Asia, and Africa expanded after these two banks merged together to form Standard Chartered Bank.
The scheme Standard Chartered Bank was involved in was called Project Gazelle, and it was to help Iranian banks process transactions through the American financial system because of sanctions put on to Iran, Libya, Myanmar, Syria, and Sudan, so because of nuclear weapon involvement. So what they did was they had a memo called Quality Operating Procedure Iranian Bank Processing, which was sent out to all staff at Standard Charters to basically help them to learn ways to cover up the Iranian banks getting involved in the American financial system. A lot of emails were sent out from different management and Standard Charter to Iranian banks telling them basically, don't put your name down on this, don't send it to New York so they can process it, just so they can cover up their tracks and still get money from the Iranian banks. So how the bank was exposed. So in 2003, the new Federal Reserve Bank of New York noticed how Standard Chartered was making deficiencies in their transactions and kind of called out Standard Chartered and said, hey, you're not following the rules. We think there's illegal activity going on. And that's what started the investigation of Deloitte going in and auditing all the transactions and making sure that they weren't doing this. And also in 2012, Standard Chartered was accused by the New York State Department of Financial Services of working with the banks and also hiding even more transactions.
So first off, the preventative laws that the UK had in place were the money laundering regulations, also known as the anti-money laundering laws. And these required companies to establish policies and procedures to detect the financial crime in accordance with the Bank Secrecy Act that was made in 1970. And the FCA, or the Financial Conduct Authority in the UK, deemed that Standard Chartered had deficiencies in its approach to identifying and mitigating and finding these money laundering activities. And the controls of Standard Chartered were said to be narrow, slow, and reactive by the FCA Director of Enforcement. And on the US side of things for Standard Chartered, they dealt with almost 10,000 transactions that were processed to or through the United States in a 5-year span that involved countries that the US had sanctioned previously. So being sanctioned means that in the US financial system, the money shouldn't come or go through the sanctioned countries. So you can't really deal financially with any of them. And the US sanctions that were broken by Standard Chartered were mainly for Iran, but also countries like Burma, Cuba, Sudan, and Syria.
So there were many consequences, some of them dealing with companies and some of them with employees. In 2012, one of the ones with the company was that Standard Chartered had to forfeit $227 million, and they had to enter into a DPA, which is a deferred prosecution agreement. And this was with the Justice Department because they conspired to violate the IEEPA, which is the International Emergency Economic Powers Act. In 2019, they forfeited $240 million, and they were also fined $480 million, and they had to amend and extend the DPA for 2 more years. As far as employees go, there was one main guy who I'm just going to call Alasi. He operated business accounts in the Dubai branch of the Standard Chartered. And he was indicted on 2 counts. Number one was conspiracy, and the second was to launder money. And if he was convicted, which he hasn't been yet, it's not exactly been followed through with the judgment, but he would have to forfeit everything that he got because of this conspiracy. And if he had sold some of that already, then they would take whatever else, like his personal things.
So the big question is, do we think this problem will continue to occur? Do we think they will still continue in money laundering with Iran? And just from knowing that most of their profit and their income comes from places including Africa, Asia, and the Middle East, the bank will most likely continue to work against the sanctions against Iran and other countries just so they're able to keep up with their income and their profit.